The CD Howe Institute is calling for the Bank of Canada to maintain its overnight rate at 2.25%. For more on this, I'm joined by Bill Robson, President and CEO of the CD Howe Institute. Bill, thanks very much for joining us.
Good to be with you.
Why the call to leave things alone?
It's a remarkable contrast between the kind of volatility in the discussion, points of uncertainty with respect to the economy and certainly the political environment. And yet, when it came time for the group to make its recommendations, there was a strong consensus that the path of inflation in Canada is toward 2%. The softening in the economy kind of puts it where the Bank of Canada would like it for hitting the inflation target. So after dealing with all the volatility and all the uncertainty and the big questions, the group really was very much of one mind on that, at least in the near term.
And what are your worries if they went either way, if they cut or if they raised it? What would be your concerns?
There was a sense among a lot of the members. They expressed that if they had to move at all, they would move down. But there wasn't a lot of enthusiasm for a cut. Only one member recommended that over the course of the coming year. And I think that's because there's still a lot of caution about the fact that inflation is above target. The bank's core measures, people have different views about how useful they are, but they're also showing much more strength. And when you look at certain types of things that are happening in food prices, everybody notices that. With the population numbers changing, there are some businesses that would be feeling a pinch on the labor side. And then there's been a bit of an acceleration in some of the measures of money and credit. So nobody was all that eager to see the Bank of Canada cut either because of the danger that inflation might not actually be licked. They liked it where it is.
And we just had the retail numbers come out today. How would you describe the Canadian economy? Delicate, fragile? How do you feel about it?
Well, consumers are looking pretty tapped out. I mean, the monthly number was strong, but that followed a couple of very weak monthly numbers. And if you look at the chart that StatsCan publishes, where they not just give you the nominal growth, but real growth, you can see that retail sales are really going nowhere the last little while. And we've also got from the Bank of Canada quite recently their consumer confidence survey, which shows that people are not feeling great. They're feeling pinched. They're concerned about the weakening labor market. So some of those things that made the Monetary Policy Council members comfortable with the current level of the overnight rate are clouds over the consumer. It's worth mentioning also there's going to be a lot of mortgage rate resets coming up over the next year. So it doesn't look as though the consumer is going to be a source of great strength for the Canadian economy. Wasn't coming out of 2025 and into 2026 either.
And are you seeing anything that might drive the economy this year, if it's not consumers?
It's interesting to see where the equity markets are. I mean, when you look at the contrasts between how people are feeling and then how some businesses are doing, I might say among the Monetary Policy Council members, there was a lot of concern about where the CUSMA negotiations are going, with Donald Trump throwing something new and different at us every day. But if that negotiation works out, preserving a lot of the market access that we now have, and we're seeing a lot of strength in materials, some of the areas of the Canadian economy that are quite strong, then in fact, Canada might be doing relatively well over the next little while. I might throw in quickly, because people are looking at these major projects and some of the pro-investment talk that's coming out of the federal government. It'd be nice to have that, but nobody's counting on it in the near term. We're not really seeing a lot of action. We're hearing a lot of noise, and we're seeing a lot of large numbers in terms of dollar signs, but it's going to be a while before any of that comes through.
And of course, south of the border, you've got the push from the White House and around the president to cut rates. Does that put any pressure up here, do you think, on the BOC?
I think it doesn't in any direct sense. The Bank of Canada's independence isn't under threat. But if you think about where this might lead in the United States, there could be some problems for us, or at least some challenges for the Bank of Canada in steering a straight course. You can see that the bond market's nervous about what's happening with the Fed. So if long-term interest rates in the U.S. go up, that's going to put upward pressure on long rates globally. And then if you get a very wide gap between the Bank of Canada's short-term overnight rate and what's happening with longer-term yields, that can be a bit of an accelerator for monetary policy. So that might induce the bank to raise the the overnight rate a bit. And if you do actually see higher inflation in the United States, that implies a stronger Canadian dollar over time. And people often get uncomfortable about that. So yes, it would create some navigation challenges for the bank.
And we have seen the American dollar weakening in the last couple of weeks. Any indicators that's going to continue with the policy happening south of the border?
There's a bit of a U.S. off mood in markets right now. And you'd have to be a very brave person to go all in on the United States, because every morning and sometimes late at night, Donald Trump does throw something else at us. I myself, if I were betting on it, would say the Fed is going to come through this relatively unscathed. But the threats are very clear. And with U.S. fiscal policy as hyperextended as it is, something's got to give at some point. And so there's a natural concern that what gives is suddenly the Fed gets forced to start buying a whole lot more debt, and that leads to inflation.
Okay, Bill, we'll wrap it up there, but thanks as always for joining us.
My pleasure. Thank you.
Bill Robson, President and CEO of the C.D. Howe Institute.